you're watching News 9 and this is the editor's take, and here we're going to take a solid line and a solid understanding, try and drill down every little word which came out in that joint statement which was released jointly by US and India. Early this morning India time, late last night US time. I think, Karthik, fair to assume at this point that whatever US President Donald Trump had mentioned in his first post on Truth Social about the contours of the trade deal, everything in the joint statement moving in that direction. However, the joint statement expectedly does not singularly mention that India will not buy Russian oil, but the $500 billion of purchases that India will make from US include not just energy, they also include defense products, and these were some things which were not mentioned in the first tweet that came from US President Donald Trump. Your initial take, I think let's first begin with agriculture, something which was a bone of contention. Agriculture safeguarded. Are you happy with what you're seeing in the joint statement, that at least critical agriculture sector and the dairy sector in India continues to be protected? Because it's not mentioned, dairy is not mentioned in the joint statement where India is eliminating tariffs.
Okay, then I'll do one thing. I'll take our viewers through what the Prime Minister's office has actually put out, the government of India. They are saying that ragi, amaranth, makkah, chawal, all the millets which we know,
the mainstay of India's agriculture.
The mainstay of India's agriculture has been protected. So what they have done is they have taken out 13, I would say, X ads, and they have put it out. The second is on the vegetables and the fruit market. They have argued that basic fruits have been protected, which includes bananas, mangoes and apples. Right. Even in the vegetables, I'm very surprised that their presentation has been very meticulous. They have not only named the vegetables, but they have, created a diagram. They have created a diagram and they have put it out. So this is to assure and assuage the anxieties which exist in our agricultural sector, that we are taking care of.
And issue was also taken up by opposition. That issue was also refuted by opposition, saying that the dairy sector and the agri sector have been compromised.
I think the issue of opposition more or less is settled. I think opposition, I think we will take that part later, which has to do with the Russian oil. Basically, opposition was primarily concerned about vegetable, horticulture, agriculture and milk. Yeah. Now, in the milk sector, and before I close in my reply, the government says that Bharatiya Dugh Padartho ko pura sangrakshan. So, in that section, they are saying cream, yogurt, buttermilk, ghee, paneer, butter oil, cheese, mozzarella. And they have actually described cheese in 3 categories. They said these are protected. So government says,
when we say these are protected, let's just break it down for our viewers. When we say these are protected, that means there is no zero tariff on American imports of these items that you just mentioned.
2 things have happened. The government, as per as the data they have put out, they're basically saying that we have protected vegetables, we have protected dairy, we have protected millets, we have protected the basic agricultural sector.
Right.
Now what they have done is that they have gone into details. For example, they say we have also protected dried vegetables, we have protected roots, tubers, bean pulses. A lot of things would say, these are banal details, but they have done, God lies in details. They have done detailing like, ki humne to kali mirch, long, sukhi hari mirch. Basic stuff which is used in Indian cuisine, they have also mentioned that they have protected it. Right. So the long and bottom is, since agriculture is also a political constituency, government says we have done our job.
Got it. Government has done its job as far as at least protecting the mainstay of India's farm produce, the mainstay of India's dairy produce.
Can I ask you a question?
The ingredients that go into cooking. Yeah, go ahead.
Karthik, I want to know, because I woke up today with the messages which I got, then I called you, we have to start a day early. But then I realized, even 2 hours before that, there was a press release by White House. Yeah. In that press release, the White House press release states that they have been told that we will not buy the Russian oil. Yeah. Now, our spokesperson of Ministry of External Affairs says,
and the release that we saw in PIB also is mum on that.
This is the sovereign choice. Right. Can you break this down? What is happening?
Right. So, I think very difficult to right now put your finger on whether India has exactly eliminated the decision completely to buy Russian oil, or whether India is still maintaining what it has been calling sovereign autonomy, right? So, so India has always said, and this is something which has been reiterated as well, that India will protect its critical sectors and India will keep its energy basket open to protect India's national interest, right? Now, if you run the numbers, India's dependence on Russian oil after August, when Trump had introduced that additional 25% tariff, India's import of Russian oil had started trickling down. India was not importing as much. So if you look at some numbers between the month of November last year and December last year, India's total Russian oil imports had fallen from about $3.5 billion to $2.7 billion. So overall, if you were to annualize this, you were still looking at something like $30 billion worth of Russian oil imports until last calendar year 2025. Now, I'm looking at, what you're asking, Kartikeya, in the context of whether India can afford to buy more American oil, right? Now, India obviously buys from all the OPEC countries, and with Russia's inclusion, it became OPEC plus. So India was buying from OPEC plus, but now if India has to meet its target, so to speak, of $500 billion worth of imports from the US, reducing Russian oil dependence, increasing American oil is absolutely possible. Add to that $500 billion requirement when it comes to aircraft parts, defense parts, etc. I think if you look at the Boeing order book that private Indian airlines have placed with Boeing, I think we will very easily offset about $80–90 billion from that $500 billion straight up. So overall, India can financially, if you look at the current account deficit estimates, India can afford to balance its energy needs between Russia and America. Remember, Russia also stopped giving us those deep discounts. It reduced to about $2.50 per barrel, and India imports those barrels in millions. So at the end of the day, I think whether or not India in its own strategic interest will cut off all oil trade with Russia or not, because remember, it's also that 25% secondary tariff still hangs as a sword on India. If India continues buying oil from Russia, we don't know when that 25% tariff comes back on us. So I think India in its own, continuing to mention sovereign interest of national, sort of protecting national interest, I think India can very comfortably balance and buy oil from whichever bloc offers the best value.
Okay. My second question to you is, there are two separate, now we can't tweet outs or X outs. Posts. Textile, apparels, organic chemicals, leather and footwear, home decor, artisanal products, plastic and rubber, and certain machinery.
Right.
Prime Minister says these are gains for Indian exports.
Right.
Then another thing which Prime Minister stresses is that this is like short tariffs for Indian goods to be removed, generic pharmaceutical, aircraft parts, gems and diamonds.
Right.
And now the third part, he says there's a great technology cooperation, and we get a boost in AI.
As well as GPUs.
Just break it down for the viewers, because generally people have this idea, okay, this deal is about agriculture, foods. Okay, that is one very important component. Tell us about the other components which are not being discussed, because sometimes main components dominates the debate.
Absolutely. Okay, so let's talk about each of these, and I think let's first begin with India's export competitiveness that now comes by way of these reduced tariffs. So all labor intensive sectors, what are called the MSMEs, the micro, small and medium enterprises, they always saw US as a lucrative market even before Donald Trump came to office for the second term, where their exports to the US market were pretty much tax-free, tariff-free. Now, if you compare it to liberalization day tariffs of 25%, compared to that and the added secondary tariff of 25%, compared to a 50% or a 25% tariff, 18% is a much sweeter deal. Compared to pre-liberalization tariff date of 2nd April or before Donald Trump came into office on Jan 20th last year, where these goods were exported pretty much tariff-free, 18% is still likely to hurt, right? But look at it in the larger context of the budget incentives that the MSME sector has got, a 10,000 crore rupee fund which has been created for MSMEs. Look at it in the context of the UK FTA, the New Zealand FTA and the EU FTA. Overall, Indian exporters find much larger markets to try and send their goods to. Now, with this 18%, one can fairly also discount 6%, and I'll give you the rationale for that, because the Indian rupee vis-a-vis the dollar has depreciated 6% in the last calendar year, which means for every dollar worth of goods being exported to the US, Indian exporters will get about 6 rupees more. So the 18% effectively, if you look at the dollar depreciation, will for Indian exporters come to about 12% or so in the pre-Trump era, which was 0 to about 12% now. It is still high, It's not as high as 25%, it's not as high as 50%. To the other point which you raised about artificial intelligence and sort of all the ICT imports that India is expected to make from the US, as well as the GPUs, the the processors which go into data centers, that is a key wish list for the US for India to buy from the United States. This is going to be a big thumbs up for companies like Nvidia, big US companies, technology companies, which are going to be central to India's AI story.
Okay, when I was going through the details, I personally feel that, there are two things about this deal. One is the business aspect of it, but another aspect is equally important, and that is the India-US relationship. And though we have arrived at the deal, my assessment is it will take some time for the confidence to be restored between the United States of America and India.
Why do you say that, Karthikeya? Because it seems that with this reduction from 50% to 18% and with a lot of elements which were critical to India now covered as part of protection in the joint statement, why do you think it's going to take longer for the bonhomie to reflect again?
See, the reason why the bonhomie will not be immediate is because, one, we have struck a deal. But what Donald Trump has done is he has broken the confidence. You can have a deal because you understand the necessity or the practicality. This relationship was built between two Bushes, Manmohan Singh, P.V. Narasimha Rao, Atal Bihari Vajpayee, Prime Minister Modi, Dr. Manmohan Singh. Now, this trust was broken by Donald Trump. Not only he broke the trust in terms of commitment, he also broke the trust in terms of decency and manner. You see, there is a way you deal with head of states. Not only Donald Trump made something which is supposed to be private, public, but he also made fun of India. He called it a dead economy.
A dead economy, yeah.
Secondly, there is a people-to-people contact between America and India. The people-to-people contact between Indians and Chinese, Indian and Russians is very, very less. There is a cultural, value-based, I would say, interaction. That has been shattered by Donald Trump, which has also some lacing of racism, and the sort of harsh right-wing politics that has come to occupy center stage in America, which is MAGA politics. At the end of it, I would say that India had done a hard bargain, good bargain, by going, taking the other route where we have maintained our decency through silence and dignity of relationship. We have told America we will not be bullied. Absolutely. And I think that's at the end of it, I would say, that's the larger message which India has given out. We will not be bullied. We will have the deal, but on our own terms.
Absolutely, and something that India stuck its neck out, also faced the repercussions of steep tariffs, but finally those 1 full year, 365 odd days of hard negotiation, of not giving in, on standing up to the bully, and eventually a trade deal which, at least on paper so far, looks like it is definitely something that India will value, the US should value, and both the ends are finally converging towards something which should potentially be a win-win. And continuing with that story, meanwhile, as India and the US move closer to finalizing their interim trade deal, Commerce and Industry Minister Piyush Goyal clarified that buying crude oil, LNG or LPG from the US is in India's strategic interest, but stressed that such decisions are taken by companies, not trade negotiators. Now, speaking to the media, Goyal said the pact focuses on smoother trade pathways and preferential access, not on directing where India should source its energy from. Listen in.
The buying of crude oil or LNG, LPG from the US is in India's own strategic interests as we diversify our oil sources. But the decisions are taken by the buyers, by the companies themselves. So the trade deal doesn't discuss who will buy what and from where. The trade deal ensures that the pathway to trade is smooth, ensures preferential access. Trade FTAs are all about preferential access to your competition. So today, when we've got an 18% reciprocal tariff, we have a preference over other developing nations who are usually our competition. And that's why the free trade deal becomes very attractive.
At the same time, Piyush Goyal also dismissed suggestions of any trust deficit between India and the United States, saying bilateral ties remain strong despite differences on some global issues. Addressing ties under the Trump administration, Goyal said the trade agreement would strengthen long-term India-U.S. strategic goals into concrete outcomes. He added that the pact is built on mutual respect and shared interests, with India and the US continuing to partner across defense, trade and strategic cooperation.
In my mind, the United States is a great country to work with. We have wonderful relations at every level, between our leaders, at the ministerial level, between our businesses, and the people-to-people contact is fantastic. The relations and the number of persons of Indian origin who work there and who have adopted that as their country. So they work as a living bridge and help nuance the relationship. In fact, the United States is a great country to do business also. I myself, in my early days as a young man, exported a lot of products to the US. I was not a full-time politician. I used to work for my party, the Bharatiya Janata Party, in my young days. But we have always believed that it's good that we stand on our own feet, we provide for ourselves, we work for a few years in the commercial world and provide and make enough capital to be able to serve the nation when you do jump into it full time.
Goyal also stressed that India will have no difficulty purchasing $500 billion worth of goods from the US over the next 5 years under the trade pact, calling the target extremely conservative for a country aspiring to become a $30 trillion economy. Goyal said demand from aviation, energy, technology, data centers and steel alone could exceed $100 billion annually. He added that despite an 18% tariff, Indian exports would remain competitive against rivals like China, which face higher levies, while safeguards in the deal protect farmers and sensitive sectors such as dairy, GM crops and meat.
We estimate that the requirements that we have for import of certain items where the United States has the ability to sell to us, things like crude oil, LNG, LPG, airplanes, their engines, their spare parts, coking coal. You know, we have 140 million tons steel capacity. We're going to increase that to 300 million tons. Our current coking coal requirement for steel is already $17 billion. That will become probably $30 billion, 35 billion a year will be required only coking coal. If we have one or two more countries supplying that, the more the merrier, we get a better deal. We can negotiate smarter and better. Okay. Planes are required by India. We already have orders of 50 billion to Boeing for planes, plus orders for engines, plus orders for spare parts. I suspect we'll need anywhere between 80 and $100 billion of just civil aviation related products.
And moving on from the India-U.S. trade deal to India and Malaysia, who unveiled a series of initiatives to deepen cooperation in defense and security, semiconductors, trade and emerging technologies, following wide-ranging talks between Prime Minister Narendra Modi and his Malaysian counterpart Anwar Ibrahim in Kuala Lumpur. After the meeting, Prime Minister Modi said India and Malaysia share a special relationship and are committed to expanding ties across multiple sectors. Earlier in the day, he was accorded a ceremonial welcome at Perdana Putra. Fulfilling a promise made last year, Prime Minister Modi oversaw the signing of 6 key agreements and highlighted the shared love for the Tamil language that binds the two nations. At a joint press statement, Prime Minister Modi said the strong presence of Tamil in Malaysia's education, media and cultural life reflects deep people-to-people links. He added that a new audiovisual agreement would help bring the two societies closer, particularly through Tamil films and music. Addressing the media after delegation-level discussions, Prime Minister Modi announced enhanced cooperation in counter-terrorism, intelligence sharing and maritime security alongside broader defense collaboration. He said both sides would also deepen partnerships in artificial intelligence, digital technologies, semiconductors, healthcare and food security.
आज एग्रीकल्चर और मैन्युफैक्चरिंग जैसे क्लीन एनर्जी और सेमीकंडक्टर तक हर क्षेत्र में हमारा सहयोग गहरा रहा है। स्किल डेवलपमेंट और कैपेसिटी बिल्डिंग में भी हम अहम साझेदार हैं। हमारा रक्षा और सुरक्षा सहयोग भी लगातार मजबूत हो रहा है। एक्सेलेंसी, आसियान की सफल अध्यक्षता के लिए आपको एक बार फिर से मैं बहुत बहुत बधाई देता हूं। हमें विश्वास है कि मलेशिया के सहयोग से आसियान के साथ हमारे संबंध और अधिक गहरे होंगे और अधिक विस्तार होगा।
All right, with that, let's pivot to market action now. And let's first begin with Asia. And in Asia, Japan has had a stellar run this morning after the announcement and, of course, the counting, which now suggests a direction that Sanae Takaichi, the Iron Lady of Japan, is likely to come back to power with 2/3 majority. The Nikkei 225 is on a high this morning. In fact, it's up almost 4.5%. At some point, it had breached that 5% mark. And similar sentiment also seen in South Korea's which is up about 4% or so. Even in Taiwan, and remember the strategic importance of Taiwan in the Japan-China sort of conversations, and remember it was Sanae Takaichi who had at some point mentioned that Japan will not refrain from using force in case China were to try and attack the Taiwanese island. Even in Taiwan this morning, we are seeing the TAIEX is up about 2.5% or so. Let's quickly shift focus to the Indian stock market. And remember, this is Monday morning and Indian markets have opened after that Saturday early morning announcement of the fine print of the India-U.S. trade deal. But sentiment is moderately high, one would call it, with both Sensex and Nifty up just about 0.5 percentage point each. Remember, the major bull run as far as export-linked stocks were concerned was already seen after before the issue of the joint statement, but after the announcement of the conclusion of the framework agreement. So we saw export stocks jump up almost 20%. But this morning, Sensex and Nifty cautiously optimistic, one would call it, at just about 0.5 percentage higher. The small cap and the mid cap space expectedly performing much better. Small cap, of course, you know, your exporters of textile, leather, apparel, accessories, gems, jewelry. These are the sectors which are definite winners when it comes to India-US ties. And you're seeing that reflect in the small cap space. This morning, volatility in the Indian market still hovering in the 12-odd range. Let's pull up the Nifty 50 heat map and look at the action on the big companies. And in the big companies, the biggest of them all seems to be SBI, the State Bank of India, which, remember, posted a standalone quarterly profit of 21,000 crore rupees, which was about 25% higher on a year-to-year basis. And this stock is running up about 6% or so higher in early trade, 6.5% as we speak right now. Meanwhile, as clarity on India continuing or discontinuing Russian oil goes, Reliance Industries also up about 0.75 percentage point. Good news coming in fact, in early trade, even for India's IT space, they had opened about a percentage or so higher, but we are seeing some profit booking this morning. HCL Tech still high, about 0.6% or so from Friday's levels. Meanwhile, TCS and Infosys now more or less in the flat territory. Let's bring in Rohit Srivastav now to help us understand what is the direction that the markets are likely to take from here. Rohit, given that most of the uncertainties that we were talking about all of last year, early this year, including budget, including Q3 earnings, including the India-US trade deal, and now finally last week even the RBI Monetary Policy Committee meet out of the way. Overall, what is the direction that markets are expected to take from here?
Yeah, good morning, Karthik. I think markets are definitely in a very positive kind of mood, considering that the US-India trade deal has been finally signed. And a lot of products and items now attract zero duty. And I think, the average tariff coming down from 50% to 18% is a big positive, for Indian exporting companies, specifically for sectors like textiles, pharma, chemicals, auto components. I think these are the sectors which are going to be in the focus, at least today. And I think looking at the Q3 earnings numbers, I think clearly one fact is very visible is that compared to quarter three, the earnings trajectory has been much better than what the street had expected. In fact, today also we are going to have a large set of companies coming out with their Q3 numbers. So I think the markets will continue to be more stock specific considering the number, the result season going on. But overall, the sentiment is good. I think clearly we now wait for the FIs to come in because for a very long time we have seen the FIs, putting, a sell or maybe coming out of the Indian markets. But with this policy change, I think probably in the next couple of months, you could see a long stream of FI buying. And that definitely is positive for the Indian market. So net, I think we are structurally positive. We would say that sectors like automobiles, auto components, capital goods, exporting companies like textiles, pharma, that could be definitely be the bright spots, in the coming few weeks.
Avinash, I understand that, export-oriented companies are likely to be the stars, at least as far as the next quarter or so goes. But I want to draw your attention to the steel and aluminum space. And again, we are seeing that despite the clarification coming in that this sector continues to attract 50% tariff. In fact, that is something that U.S. Trade Representative Jamison Greer has also confirmed, that 50% tariff on steel and aluminum continues to be intact. While it may not impact the entire export potential of the steel aluminum sector, because there is that clause 232, if I'm not mistaken, which is likely to impact about 18 to 20% of India's total exports to the US when it comes to this sector. But we are seeing some positive run-up even in stocks like Hindalco and Tata Steel as well as JSW Steel this morning. This 50% tariff, not scary news for them?
No, I think my guess is that, this is the beginning of the US-India trade deal agreement. So maybe in the next couple of months or maybe in the next 1 or 2 quarters, there could be some further tinkering on the duties specifically for steel. And Karthik, I think if you look at the performance of these companies in Q3, I think one good part is that, metal prices have started inching up, whether it is aluminium, whether it is non-ferrous, whether it is ferrous. I think companies like Hindustan Zinc, typically Hindustan Copper, or for that reason Tata Steel, I would say that the structural story in these companies is pretty solid. Most of the negatives had already been built into the price, and I think investors should realize that definitely in the domestic market, the demand for metals is growing quite rapidly. The budget has also allocated a very large budget for the capital expenditure program this year. So net, yes, I think this is a small dampener, because markets were expecting that even on the steel sector, the duty could be reduced, so that could give them a big leeway in the export market. But otherwise, I think it's not something to panic about. I think you could find maybe a slower movement in these stocks, but definitely, I think structurally, they appear to be quite positive.
Okay, structurally positive. What about the electronics technology space? And I'm talking about companies like BEL, and I'm also talking about companies like HAL, which are deep-rooted in India's defense story. But we are seeing that India is likely to purchase more defense equipment, more aircraft parts from the US. India is expected to buy more ICT also from the US. But again, we are seeing positive momentum here. I understand Dixon Tech, because it's making smartphones which will be exported to the US. But other sectors like other companies like HAL and BEL, are they likely to be positive going forward as well?
Yeah, I think, Karthik, if you see the budget numbers, I think the allocation for defense has increased by about 20-21%.
Yeah.
And I think, despite the fact that India will be importing, obviously, a large percentage of the defense, requirements from US, I think on the other hand, the government is encouraging the Make in India program. So I think simultaneously, wherever the Indian companies are not able to offer products which require, advanced technology, that could be imported. But otherwise, the Make in India program is proceeding quite well. We have been seeing that the government has been releasing more and more orders for Indian companies, especially for companies like BEL, HAL, Bharat Dynamics, and even the shipping companies like Mazgaon Dock, Cochin Shipyard. So I think the mood is pretty solid. You need to give some time for these companies to actually show the numbers, because order books are pretty healthy. But this is definitely a long gestation business. So I think investors should take a slightly longer term call. But yes, the mood is definitely positive for defense.
Okay, mood is positive for defense. What about pharma? Because pharma again is something which India's generic pharma story, and now of course though pharma initially, if you remember, Avinash, was kept out of the reciprocal tariff, but the fact that Donald Trump has also announced his own sort of TrumpRx.gov, their own generic pharma website where OTC drugs can be bought. Overall, with this trade deal, with the momentum of India-US, trade tension thawing, trade talks moving in the right direction, agreement likely to be signed, overall pharma story for India also looks up from here?
Yeah, definitely, Karthik. See, US has always been a very large market for some select Indian pharma companies. And I think once this trade deal is signed up, a lot of certainty and a lot of stability and clarity now comes in the picture. For the last few weeks and months, there was a little bit of uncertainty, but now things have got cleared. Companies like Sun Pharma, Lupin, Torrent Pharma, or for that reason, Glenmark, companies which have got a large exposure. A company like Aurobindo Pharma, where we are quite positive. I think companies which have got a large exposure on the US markets and which have a very large generic pipeline obviously will benefit. But I think you'll have to wait for maybe a couple of quarters before we see the actual numbers shaping up, because volumes as well as margins are definitely going to improve going forward.
All right. And finally, I also want to pick your mind on reliance on the entire energy pack, because there is still that confusion, and in fact, there's a little bit of toss-up which is visible politically when the Commerce and Industry Minister is not giving much clarity on whether or not India is going to stop buying Russian oil, deflecting it in the direction of MEA. MEA has been completely mum on the issue as well. But overall, in this entire energy play, given that now Venezuela is also, in a few months, if not weeks, likely to get added to the overall energy mix, and India saying that is going to decide commercially what is the best arrangement. Overall, as far as energy goes, what is the outlook from here on?
No, I think it looks pretty positive. I think oil prices are stable, and hopefully, if they remain stable, then I think players like Reliance, all the oil marketing companies could definitely be in a sweet spot. We are positive on Reliance. We believe that, Reliance, according to some reports, has said that they are open to buying Venezuela oil. That will actually help them, monetize and, strike upon the right opportunity to actually lessen their cost. And most importantly, all the oil marketing companies, Karthik, if you look at the automobile and the aviation sector, throughput is going to increase significantly. Both these sectors are growing rapidly. So I think companies like BPCL, HPCL, IOC, which all reported very strong numbers, I think this momentum will continue. And hopefully, if we have oil prices between $65 to $70 a barrel, that gives good flexibility for the GRMs to improve in the coming few months. So I think net we are positive on the oil marketing companies and Reliance at current times.
All right. So positive everywhere. Any sectors negative? How do you see the retail space? Is the retail space likely to be under some sort of, consolidation going ahead? Because there are going to be potentially cheaper American goods also coming into India, given that India has almost, reduced tariffs to nil and will reach that complete elimination path soon. Is there going to be some disruption in the retail space, or do you think it's actually good news even for India's retail sector?
No, I think overall we'll have to see how the onslaught of US goods comes in the Indian market. But I think players like V2 Retail, or for that reason typically something like a Trent. If you see the numbers for Q3, they have been very solid. And my sense is that Indian customers are going to be picking and choosing the products based on the value addition and the value for money kind of concept. So I think it all depends on what kind of target segments are going to look at foreign US products and services. So I think we'll have to wait and watch, Karthik. I think you'll have to give in at least a quarter, maybe the January to March quarter, before we actually see these products in the market. But I'm not very much worried. Indian companies are very solidly positioned, and I think one should not be feeling panicky at this point of time.
And you started off by saying that FIIs are going to finally make that U-turn and come back towards India. Is that also going to take a quarter, or can we see FIIs coming back much sooner?
I think it will take maybe 2 to 3 months. But Karthik, one thing is very clear. The valuations in the Indian market have corrected significantly. We have been seeing Q3 numbers, and we have been analyzing a lot of companies, from the broader markets. So I think it's a matter of time. I think they cannot ignore India. And I think looking at the valuation and the earnings growth, specifically for FY27, my sense is that maybe April or May, could be a time where they could actually start moving in a big way.
Right, Avnash Karakshakar, Head of Research, Profit Mart Securities. Thank you so much for your time and for joining us with all this input on various sectors and stocks. And with that, before we head into a break, let's also take a look at what else is happening in Asia. And of course, the big story comes from Japan. And that is where Sanae Takaichi has gone ahead and won the mandate. It seems it's going to be a 2/3 majority. And this is obviously something that the markets across Asia have given a thumbs up to. That story on the other side of the break. You're watching News 9.
रश्मि,
हाँ?
ये मैडम बड़े शहर से छोटे शहर बसने जा रही है, बताओ।
अंकल अंकल, इंडिया के छोटे छोटे शहरों में ही तो है बड़े बड़े अखाड़े।
नए नए दावपेच सीखेगी और फ्यूचर में मेडल जीतेगी।
और बेटा इनका फ्यूचर?
बड़े पापा, SBI लाइफ से इनका फ्यूचर सिक्योर है।
तभी तो इसकी जीत का इरादा पक्का है। करो पूरे अपने इरादे,
अपनों से किए सभी वादे।
SBI लाइफ अपने लिए,
अपनों के लिए।
Sometimes it flows like water, light and free. Sometimes it stays grounded like the earth beneath. Sometimes it sparks romance. And sometimes it grows into an evergreen togetherness. Senko, elements of love.
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
Welcome back. You're watching News 9. This is Morning Brief at 9. Let's look at the global stories we're tracking for you this Monday morning. Japan's Prime Minister Sanae Takaichi is celebrating a decisive election victory, with her ruling party securing a historic two-thirds majority in the powerful lower house. The landslide strengthens her political mandate, but attention across the Asia-Pacific will now turn to how Tokyo manages tensions with China after Takaichi's earlier remarks on Taiwan sparked anger in Beijing.
Supporters applauded Japanese Prime Minister Sanae Takaichi on Sunday after her coalition swept to a landslide election win. The victory paves the way for Takaichi's tax cuts that have spooked financial markets and military spending aimed at countering China. The 64-year-old called the rare midwinter snap election to capitalize on her high approval ratings after becoming Japan's first female prime minister late last year. Voters have been drawn to her straight-talking, hard-working image.
Takaichi had a slightly different vibe compared to what we have had so far in the political scene, so I'm feeling somewhat hopeful. That's why I voted.
But her nationalistic leanings and emphasis on security have strained ties with powerful neighbour China, while her tax policies worry investors as Japan carries the heaviest debt burden among advanced economies. There are so many issues piling up, this voter said. Defence, food policy, social welfare, population issues and the environment. It's overwhelming. In less than 2 hours after polls closed, the Conservative leader had already brought her Liberal Democratic Party more than the 233 seats needed for a majority in Parliament's lower house. And with coalition partner, the Japan Innovation Party, known as Ishin, Takaichi now has a supermajority of 2/3 of seats. This means she can override the upper chamber, which she does not control, easing her legislative agenda. The LDP, which has ruled for almost all of Japan's post-war history, had lost control of both houses in elections over the past 15 months under Takaichi's predecessor. US President Donald Trump last week gave Takaichi his total endorsement and said he would host her at the White House next month. China will also be keeping a close eye on the results.
All right, the United States is urging Russia and Ukraine to reach a path toward ending the war before summer, according to remarks from President Volodymyr Zelensky's office on Sunday, even as Moscow launched a massive overnight strike targeting Ukraine's energy infrastructure. The escalation underscores the urgency around peace efforts amid continuing battlefield pressure. Take a look.
Russia launched a huge air attack on Ukraine overnight, Kyiv said on Saturday, as Ukrainian President Volodymyr Zelensky said the United States is pushing for the war to end before summer. Footage released by emergency services showed a warehouse in the Kyiv region on fire, with officials saying it was struck by a drone. Reuters was able to verify the location of the video, but not the date it was filmed. Zelensky's remarks about the war were released by his office after Ukraine and Russia held 2 days of US-brokered talks in Abu Dhabi last week. In it, he said Washington has proposed talks in Miami in a week and that Kyiv had agreed to it. He also posted on X that he expects the US to pressure Kyiv and Moscow to get everything done by June, pointing out that US congressional elections were due in November. In a video statement, Zelensky also criticized Russia for again targeting Ukrainian energy facilities in its latest attack. He said the strikes impacted Ukraine's nuclear power plant operations, causing one unit to shut down. This is a level of strikes that no terrorist in the world has ever allowed themselves, he said, calling it a danger to Ukraine and Europe. During the overnight strikes, Kyiv's residents hunkered down in the capital's subway metro stations. One of them, Tetiana Zubenko, said she wants US and European negotiators to feel what Ukrainians are going through.
When they grasp just a tiny bit of our reality, maybe just power cuts during freezing cold, maybe then they will understand how we survive here.
The Abu Dhabi talks concluded without a major breakthrough. The Russia and Ukraine agreed to exchange prisoners of war, the first such swap in 5 months. According to Zelensky, Washington has asked Kyiv and Moscow to agree to a new ceasefire covering strikes on energy infrastructure as a de-escalation step. However, when US President Donald Trump said in late January that Moscow had agreed to a similar truce for 1 week, Russia attacked Ukraine's power systems again after just a few days.
Moving on now, Iran's Foreign Minister Abbas Araghchi has ruled out any move to abandon uranium enrichment ever in its negotiations with Washington, insisting that Tehran will not be intimidated by the threat of war with the United States. The Iranian Foreign Minister also said he was consulting with Tehran's strategic partners, China and Russia, about ongoing negotiations with the United States. The US and Iran reopened negotiations last Friday in Oman for the first time since Israel's 12-day war with the Islamic Republic in June last year, which the US briefly joined. Iran is seeking to have US economic sanctions on the country lifted in exchange for what Araghchi said could be a series of confidence-building measures concerning, the nuclear program. And shifting focus to the US now, Wall Street closed on a strong note on Friday with the Dow Jones Industrial Average blasting past the historic 50,000 mark, while the S&P 500 surged higher as chipmakers led a powerful rally. Nvidia and other AI-linked stocks jumped sharply even as Amazon slipped after warning of a steep rise in spending on artificial intelligence infrastructure. Take a look.
The Dow Jones Industrial Average blew past the historic 50,000 mark on Friday, climbing nearly 2.5%, while the S&P 500 gained about 2%, and the Nasdaq added more than 2%. Chip stocks led the way, rallying on expectations they would benefit from increased spending on AI data centers by Amazon and Alphabet. Nvidia, AMD, and Broadcom all surged, each adding roughly between 7 and 8%. Friday's stock rally followed 3 straight days of losses for the S&P 500 and Nasdaq, marked by worries about AI. Several software companies were hit by concerns that AI could create more competition, while investors also fretted about big tech's high stock valuations. Chris Brigatti is Chief Investment Officer at SWBC.
Today's bounce back is somewhat of a foregone conclusion in terms of we did have some pretty remarkable sell-offs and weakness, and I think at some point the market finding some stabilization, an area for buyers to step in and capture some good opportunity to put cash to work at lower levels is really kind of driving the bus. And my perspective when I'm looking at opportunities and opportunities for pullback are really important to observe. We have one of those right now. I don't think it's necessarily over completely, but I do think there's opportunity in the space.
One outlier was Amazon, with shares dropping about 5.5% after the company said it planned a more than 50% jump in AI spending this year. That followed a similar announcement from Alphabet on Wednesday. Among other movers, shares of Molina Healthcare lost more than 25% after the health insurer forecast 2026 profit at less than half of Wall Street's expectations. And shares of online telehealth company Hims & Hers fell more than 12% in extended trading after the FDA said it plans to restrict GLP-1 ingredients used in non-approved compounded drugs. The announcement came one day after Hims said it would begin offering a compounded version of Novo Nordisk's new Wegovy pill at a lower price.
On to Cuba now, that has unveiled a sweeping emergency plan to safeguard essential services and Russian fuel. as Havana braces for tightening pressure from Washington's effort to cut off oil supplies to the island. The measures underscore the deepening energy strain facing the communist-run nation amid rising geopolitical tensions in the region. Take a look.
The streets of Havana were unusually quiet Saturday morning, a day after Cuba's government announced fuel rationing measures across the island. The government announced the new measures after the United States stepped up pressure on the island's energy supply. U.S. President Donald Trump threatened to slap tariffs on U.S.-bound products from any country exporting fuel to Cuba, and suggested hard times ahead for Cubans already suffering severe shortages of food, fuel, and medicine. At the same time, Washington says it is increasing humanitarian aid. U.S. officials announced an additional $6 million in assistance, bringing total aid since last year's Hurricane Melissa to $9 million, even as efforts continue to block fuel shipments to Cuba. The Trump administration has cut off oil flows that once came through Venezuela, and is warning countries like Mexico they could face tariffs if they keep shipping fuel to the island. Cuban officials have called the policy contradictory, arguing that U.S. pressure is deepening shortages of fuel, food, and medicine. And in the streets of Havana, the effects are hard to miss. An unidentified taxi worker told Reuters the fuel situation has become chaotic, with only a handful of cars operating where dozens once worked. Another taxi driver, Damian Palmeras, said fuel is now rationed by tickets, with drivers limited to just 20 liters at a time. Authorities say what fuel is available will be reserved for essential services like healthcare, agriculture, education, and water systems, while tourism and export industries continue operating to protect foreign currency earnings. For now, officials say rationing will stay in place until supplies stabilize, without saying when relief might come.
South Korean crypto exchange Bithumb says it mistakenly distributed more than $40 billion worth of Bitcoin to users as promotional rewards, an error that sent shockwaves through the market and triggered a sharp sell-off in digital assets. The incident has raised fresh concerns over risk controls in the fast-moving crypto sector.
South Korea's Bithumb crypto exchange has apologized for a $44 billion mistake after accidentally giving away 620,000 bitcoins as part of a customer reward campaign. The company said it had restricted trading and withdrawals for the 695 affected customers shortly after the error on Friday, and that it had recovered 99.7% of the bitcoins as of Saturday night. The exchange had planned to distribute small cash rewards of 2,000 Korean won, worth about $1.4 or more to each user as part of a promotional event. But instead, winners received at least 2,000 bitcoins each, media reports said. In a statement, Bithumb said the incident was unrelated to external hacking or security breaches, and there were no problems with system security or customer asset management. But South Korea's financial regulators, including the Financial Services Commission, said the incident has exposed the vulnerabilities and risks of virtual assets. After an emergency meeting, the regulators said in a statement they would review Bithumb and other crypto exchanges' internal control systems, as well as their holdings and operations of virtual assets. And if irregularities are found, an on-site inspection would be launched, the statement said. Bitcoin is the world's largest cryptocurrency. Charts from Bithumb Exchange show Bitcoin prices briefly slumped 17% on Friday evening after the incident, but later recovered.
And finally, Munich-based robotics startup Robco has raised $100 million in fresh funding backed by investors, including Volkswagen's venture arm. The company says the capital will help expand its footprint in the United States and accelerate development of its AI-powered physical AI robotics technology. We leave you with that story.
These robotic arms are bringing artificial intelligence to the physical world. Its maker, Munich-based Robco, is working to advance so-called physical AI technology. But what is physical AI, and why is it useful?
Yeah, physical AI to us at Robco is the application of AI in the physical world. That means in the manufacturing environment, in the industry, in production environments.
Roman Herzler is the co-founder and CEO of Robco, which was founded in 2020. The German company specializes in modular systems, such as pallet stacking and component engraving. Herzler says his team does all of the setup and pre-trains the robotic arms before customers use it.
With the idea of automating, we go on site, we scan the environment, and we would create a digital concept of that specific industrial environment. So you would see the machines on that shop floor, the environment, the parts that are to be handled, and then we create a digital twin of the robot and that environment, and we would demonstrate the types of tasks we do, the output, the cycle time, the interfaces to existing machinery and safety equipment, for example. And on that basis, we then deploy the actual physical robot in the field.
Robco, whose customers include BMW, is bolstering its position in a rapidly expanding market with a fresh capital injection. Thanks to investors including Volkswagen's venture capital arm and Exor, Robco announced on Thursday that it's raised $100 million, which will be used to expand its U.S. footprint. Robco says the funding will help accelerate its efforts to scale globally and refine its robotics technology.
This isn't a trail of peace. This is pressure overload. A hill built for 1,000, forced to carry lakhs.
Instead of lightening the footprint, you have allowed people to actually get into every nook and corner of the Himalayas.